I'll introduce myself, and then I'm just going to go through a bit of background on crowdfunding. And then after that, I'm going to just go into what's really going on in this. I'll try and make sense of what's going on in COVID land and help you make some decisions around whether crowdfunding is right for you at this time or in the future. So first off, I can see we've got quite a few people here from Canada, great. And we've got an American in here as well, so that's great. So just, I'll make sure that I tailor to your needs. So hopefully you can see my screen up there. So I'm just checking. Oh, just getting a notification, somebody coming in. So that's great. So we're here today to talk about, is now a good time to crowdfund? A bit about me. So I was born in Wimbledon, London. I studied biochemistry at the University of Edinburgh, and that's typically what happens in the UK. You don't do marketing as a first degree. So I went to work for on the Tide brand, worked on Pampers, and then came over to Canada and worked for TD Bank, which you'll be familiar with in the States as well. And then on top of that, lots of great brands in North America too. And I was asked to run my first crowdfunding campaign when I was on the board of the Calgary Boys Choir. We raised enough funds to fund the 40th birthday celebrations so that we could actually have them all for free. And then anybody would pay to attend. That money went in to build up a fund to pay for boys to join the choir. And, I can remember being given this project and going like, what is crowdfunding? And it just blew my mind, because one of the things that I really appreciated is the fact that with crowdfunding, it really is a true democratizer. So if you have a great idea and a great team, but you just don't have that sort of network of people, that project can fall flat, and that's not good. Secondly, from an individual point of view, why should it just be the super wealthy who get the opportunity to invest in those really early stage projects? So, for me, I was really keen to sort of take this a bit further forward. And so when I had a business which we sold, and I used that opportunity to set up my own business to help companies run their own crowdfunding campaigns. And that's what I've been doing ever since. So, what do I want you to get out of this presentation? I want you to be able to assess whether crowdfunding is right for your business, assess the right timing for your crowdfunding campaign, and that's probably key in this current climate. And a lot of today is actually really looking at the insight into the changing world of investment, both from an investor point of view, so what's happening in the marketplace with consumers, and also from a regulation point of view. Although I have to say, there's not as much change as I had hoped at this stage. Anyway, so just a quick top line, options for raising capital. So there's always bootstrapping. And I have to say, in this current climate, I would say absolutely bootstrapping is where you should be looking. We don't know how long this sort of situation is going to go on for. And so you really need to be thinking about every penny that you earn, where it's being spent. This is a case for startups, but it's a case for scale-ups, and actually this is a case for ongoing businesses. So bootstrapping loans. Interesting, governments around the world are offering government-backed loans at the moment. So loans are actually easier, but we're seeing so many cases of people who slip through the criteria because they wrote the criteria very quickly. They had to, and so there are people slipping through. So, but loans, if you're able to get them, the one thing with a loan is you build up debt, and do really want to be debt focused. Friends and family, that's usually the way. But as I say, not everybody has friends and family, and the definition of friends and family is very tight. So, a lot of people don't fit into that criteria that you think you would do. Brother-in-law was one that blew my mind. It doesn't count as family. Venture capital. So if you took someone like, Luke Kruger, who heads up Valhalla Angels here, he always says venture capital is the most expensive capital, because they do take their lion's share. But what they do is they provide sort of jet fuel. So if you want to grow really rapidly, VC money can be the way to go. But that doesn't mean that it can't be part of the process. So, it might be the last stage, and you may use all these other stages prior to that. Angel investors. Angel investors, that one person, we've all watched Dragon's Den, and that person who comes in with that big dump of money, that's certainly something that is out there. I talk a bit about sort of venture capital and angel investors in this presentation, and then crowdfunding. And it's really, which one is right for your business, but which one's right for your business right now. So crowdfunding, let's talk a bit more about crowdfunding. So it's an excellent way for companies to raise capital, expand your network with a group of advocates who believe in you and want you to be successful. So it's all about raising funding online from a large group of people. So you get lots of little amounts of cash from many people to give you the big amount of cash to do what you need in your business. And there's different types of crowdfunding. And this slide got squashed. I apologize. So on the left-hand side, you've got sort of the sort of fundraiser or GoFundMe. Fundraise is actually a very large Canadian platform, and that's sort of the donation side. So if you've got you've got a cause, then that might be the route you take. People get out of it a feeling of accomplishment. The next one along is a rewards-based, and an example that would be Kickstarter, Indiegogo. One of the other ones I just wanted to raise because it actually fits between two. If you're lucky enough to live in Alberta, and I see we have a few Albertans on the call, we have a treasury branch which I can remember raising this at the Global Crowdfunding Conference because it's basically a bank with a crowdfunding platform. And I can remember them saying, there's never going to be a bank that's going to have a crowdfunding platform. And I put my hand up and said, there already is. And the whole world couldn't believe it. So we're very lucky we have a bank with our own crowdfunding platform called ATB Booster with an R at the end. And they're currently offering, and I want to shout that out to them, they're currently offering free booster campaigns for businesses in Alberta. So if you are in Alberta, I would say have a look at that. It's more in that sort of donation rewards. You're not actually giving up any equity in your business. But if you're looking for some smaller amounts, that might be a really good thing to look at this moment in time. So the other one that I find really interesting here is the peer-to-peer lending. Now, with because the amounts of money or I should say interest rates at the moment are so low, I have heard on the street that the peer-to-peer lending is having a bit of difficulty because, of course, people are looking for higher returns, and especially the government-backed lending that's taking place at the moment. Peer-to-peer lending may not be the most successful place to be at this moment in time. EquityNet is a royalty-based platform, and what they do is, and again, I'll go back to Dragon's Den, just because people feel comfortable with, they've watched it and they understand the concept. With royalties, that for every time you sell something, you give a percentage back to the person who actually invested in you in the first place. It does offset the taxes, so it's quite a good way of doing it. But what I'm going to focus on today is equity investment. And as I can see, actually, almost all of you are in Canada. So, the largest equity crowdfunding platform in Canada is FrontFunder. They're based out of Vancouver with offices in Toronto. And they really are the leading equity investment platform. So just examples for different types of crowdfunding. And of course, what are you doing then is you're actually giving up an ownership stake of your business. So it's that classic, I have to give up some of my pie. Yes, but your pie gets bigger. So anyway, so that's, I'm hoping these aren't two eye charts. Sorry if they're a bit small. I will try and talk through them. What I really wanted to go through is, I know most of you are wondering, is now a good time to crowdfund? So let's actually take it many steps back and look at what's going on with consumers. So what we're seeing at the moment is, this is actually from a company called Relay. They're based out of Vancouver, and they do some super cool surveys, really like texting. So it's just like there would be people be texting to a friend, except they're texting to a surveyor. So they get some really authentic communication. So the company's name is Relay, R-E-L-A-Y. Highly recommend you go and talk to them if this is the data that you're looking for. One of the things that they showed is that the trends in positive and negative sentiment over the weeks of COVID that we've had so far. And one of the things you notice on that left-hand side is that they're coming together. So basically, people's emotions are actually tightening up. So you're not getting the extremes. They're neither positive or negative. They're sort of like, meh. It's sort of like, almost resigned to it in many ways. Be interesting to see how it goes, because there's a lot of people opening up, see if that changes. But when they actually look at the consumer mood over weeks, one of the things I find really funny is that, you know, first few weeks, everyone was super stressed, and stress is still very much there. You know, things like confident and happy are sort of, you know, I think the first week everyone was happy to be at home, and then, so you're certainly seeing that sort of change that's taking place. One of the things that I think is quite interesting is the bored. So the bored is now the most prevalent consumer mood that's out there. And one of the things that we're seeing is that social media usage is up by 35%. And I think, you know, that's that bored, what do I do? So, you know, some people are using that time to do things, you know, read books, learn skills. You know, some people are super busy working from home. Some people are still having to work out of home. But for a number of people, they're bored, and so they're sort of looking for things to sort of stimulate them. And I think that's quite interesting in the sense that you know, with one of the things with this is crowdfunding is an online process. So people are bored. Perhaps they have more time to actually read things and actually to make an informed decision. So I think actually in many ways that's where my view of that data lies. This is Edelman data. I actually thank you very much to ATB for providing this. But the Edelman data is the trust barometer. Really recommend you have a look at this data. Edelman do this on a monthly and a quarterly basis, and it's outstanding data. I attended an event with ATB, and they allowed me to share this. And but it is taken straight from the Edelman data. So I think it's interesting to look at people's perceptions. So you need to have a think about your business. What is it focused on? And does it meet the needs of people today? And will it meet the needs of people tomorrow? Because people want to see that your business is going to be successful. So one of the things that you need to look about is looking at, are you putting, you know, people first? Now, one of the things that we're seeing is a huge increase in impact investing, or ESG, so environmental sustainable investing. And the reason for that is because it's this people, planet, profit. People are looking for companies, and this is their consumer purchasing as well. People are looking for companies that really put people first and purpose first over profit, because what actually happens, and if you look at things like B corporations, which are benefit corporations, ones that put stakeholders first, is that they typically outperform the marketplace. And you're certainly seeing sort of changes that were happening in the marketplace have been accelerated by this extreme process that we're going through. So one of the key things for consumers out there is that they want people to put, they want companies to put their people first, to put the world first, prior to putting profit first. And otherwise, there's long-term trust. And I think we've all got stories of companies which have been a bit clanging bells and just have not given the right message at this time. For a large percentage of people, the brand's response in this crisis will have a huge impact on purchasing in the future. I think we've all can see that coming through. And then the next one is sort of want brand advertising to focus on how brands help people cope. I think that's very sensitive for now. I don't know if that's necessarily going to be from a crowdfunding point of view, but I think it needs to be addressed in a crowdfunding campaign. And they want brands to speak about products in ways that show they're aware of the crisis and impact on people's lives. And I think that's really important. There's been a bit of a debate. Do you put COVID into your crowdfunding campaign or don't? And I highly recommend you do. I think it would be, people would go, well, do you not know what's going on? And it would look like you're insensitive to the situation. Want brands to stop any advertising and marketing that's humorous. We sometimes use humor in crowdfunding, any way of connecting to people, but it's not usually the way. It's usually more of a sort of emotional, purpose-driven, which is more consistent with what people are looking for at the moment. And a lot of people are not paying, over half, are not paying attention to new products unless it helps with life challenges. And I think that's key, is how does your product or service that you are offering really help with life challenges? So help with what's going on today, but also help with what the future holds, this new normal or next normal. Okay, so now we're going to look at some data from a company called Anstis. Anstis is based in Calgary. And great guy, Mark Szabo, gave me permission to share this data with you. But another company that's looking at some really in-depth information. And again, similar sort of genre to the data you saw from Edelman, which was Canada-wide. This is also Canada-wide. And what people are looking for at this moment in time is that you're being compassionate to staff, and you live your values beyond the product. And I think that's key to when we're talking about campaigns. The other thing is this demonstrate a local connection. And I'm going to give you some examples of how to do that. Just to explain the data, sort of the sort of more on this means the lower rank. So people were asked to rank this on a 1 to 6 scale. So the lower people put it down, or the higher people put it, it would be in the purple. And so, you know, things like easy online purchase, which actually I thought would have been higher, you know, didn't come out because I think, and I don't think it's because it wasn't important, it's just these are more important. So being compassionate to staff, live their values beyond the product, demonstrate a local connection. And I think it's interesting on that be compassionate to staff, how many adverts on television now actually start with what's going on with the staff and then move into their messaging. So there seems to be a consistent theme. So spending changes. Now, this is the one that sort of, you know, when we start getting into that investment. So you can see more investing in financial markets is actually quite low down, is actually quite lowest ranked. So again, they were asked to rank, on this case, 1 to 7 scale. You know, so, but when you actually break it down, what we're seeing is that those people who earn over 150K household value, that this is not so much the case. So they are actually still investing. So this is one of the clues, is that you need to look at your investor personas, the people who you anticipate to actually invest in your business. And you may need to skew it a bit more to those people who are wealthier versus those people who, you know, may put smaller amounts in. But I'm going to tell you a bit of a story about that as well. But the other thing I found interesting was sort of higher quality products that last longer versus more material goods. So certainly now, consumerism is less prevalent. Will that continue? There's certainly indications that people want that to continue, but will the market allow it to continue? But I think, you know, there seems to be much more about higher quality products that last longer. So, you know, is that the story that you need to play? This is the last ever X you need to buy. And the other one I found quite interesting was more owning things versus renting and leasing. A lot of crowdfunding campaigns at the moment are to sort of to support that economy where people know that, like a drill, I think it's something ridiculous, like a drill only gets 2 minutes of use at home, which is why if you have a shared sort of tool library, it actually gets much better use. So, you know, the Airbnbs, the Ubers, all of those are around that. And those came out of the last recession. So, you know, I found this data quite interesting, but it's middle of the road. As I say, is it just because these things are more important? But I think that's something we just need to be sensitive to if that's what your campaign is all about. So, so let's look at the marketplace changes. So this is from BMO Capital Markets. The crisis in some sense has brought the future into the present rapidly and sometimes harshly. And there's some spacing errors. I apologize for those. Accelerating changes are already in train. Some people have said it's like a generation of social change happening in a few months. And I think that's probably quite a good way of looking at it. No doubt that some sectors face long-term challenges because of the shutdowns and distancing measures, and some potential fundamental changes in consumer behavior and psychology, some that I just referred to. But at the same time, in classic creative destructive fashion, there will be some sectors that strengthen and step into that gap. And that's really where I hope you guys are. I really hope that the products and services that you're looking to crowdfund, the businesses you're looking to grow, are really in those sectors that strengthen and step into that gap. So let's have a quick look at what those are. So I apologize. I dumped it in because I thought it was so valuable that I just, you know, took the McKinsey report. So there's actually a new slide I slotted in yesterday because it sort of came out yesterday morning. So we're seeing discretionary spending in most countries being pulled back. So those are the sort of, when I was talking about like consumerism, that's what we're seeing taking place. Now, you know, they talk about precipitous declines in restaurants. Well, restaurants, yeah. You know, social distancing, not going out, you know, that's understandable. It'll be interesting as things start to open up, how that changes. Apparel, footwear, jewelry, accessories, travel. So travel, we know that's going to be the case. The apparel, footwear, jewelry, and accessories, there's been nothing stopping people buying. You can buy anything you want online. People haven't seen it, so it hasn't been in their face to buy it. But, you know, I think comes back to that line before. Are people going to buy a really good pair of shoes that lasts them a while as opposed to throw away fashionable shoes? You know, and really what you want to look to is countries that have opened up, and China is one that has opened up. And so you're seeing sort of things that there is some increase in spending in pet care, fitness and wellness, skincare, makeup, and basics for childcare. So, you know, there's some certainly some differences there. People are spending more on groceries, household supplies. Part of that is people sort of hoarding, but there still is an increase in there. And of course, one of the things that grocery stores have seen is people shop less often, but larger amounts. So I just want to give an example of a campaign that's running currently. It's a company called Pontus, and it's a plant-based protein powder. So it's sustainable, so it fits into the profile that people are looking for, putting the planet first. It's biosecure, so lots of debate how this all started and whether it was bats in wet markets. Biosecure means that there's no chance that there can be that cross-contamination. And the other thing that we're seeing a trend in is the plant-based protein. Now, some of that is due to shortage of meat because of some of the packing factories closing down, because of their increase in COVID. But also people are looking to sort of introduce more plant-based protein in their life. So it's an agri-tech, so tech often does well, and it shortens the supply chain. And one of the things that CEOs are seeing is that, you know, they thought they had good supply chains. Their primary supply chain was resilient. They didn't know what the secondary or tertiary supply chain was. And so one of the challenges they're seeing is the fact that people are, those secondary and tertiary ones are falling apart. So people are looking to buy local and to really shorten that supply chain. So Pontus certainly fits into that perfectly. So what did Pontus do because of COVID? So they actually started their campaign when you could actually meet up. They actually did a event with meeting real people. Wow, it seems strange nowadays. What they pivoted to do was they focused on large investors. So go back to that thing about the people over 150K income. And so that's really where they're focusing their efforts at this moment in time. And as you can see, they've raised over 500,000 from 30 investors, and they're well on their target to hit their 750,000. What they've done is they've increased webinars to build trust because they can't meet people and shake people's hands. They actually have been doing a lot of one-on-one webinars and one to small group webinars where people can really interact with them and build trust. And they've also extended the campaign duration. And I think that's one thing, you know, the typical 30-day, 45-day campaign probably isn't the case. If you're in Canada, typically a campaign, if you're using the crowdfunding exemption, it's a 90-day campaign. And I think you should be looking at running probably 60, if not the full length campaign. And if you are concerned, then you should consider looking at an offering memorandum, which actually allows you to run a campaign even longer than that. Okay, so crises can breed innovation and launch great businesses. So where do we see the opportunity sitting now? So what you want to see is your business is on this left-hand side, not the right-hand side. And what you want to see is, if it's not on the left-hand side, how do I pivot it to get on that left-hand side? So automation, because we can't, we've got to keep that social distancing. A lot more things have been automated. And this is something that's had quite a lot of resistance. Are we going to get rid of jobs? But people are realizing we actually have to do that. So automation is one. Local supply chain, just talked about that. Anything that supports telework. I think that's absolutely key. One of the things I heard last week was a CEO of a bank said that because they've put the right tools in place in people's homes, productivity is actually up 40%. And I think people are enjoying the fact they're able to connect with their families. They're not having to travel so much, and also they don't need to have meetings face to face so much. I think that, when we look at those risks and we talk about travel, and energy, people aren't traveling so much, energy usage is down. And there's still going to be times when face to face is the best way. Some of those tricky negotiations will still need face to face, but I think anything that supports telework is going to have benefits. Virtual learning. I mean, we're seeing this. My children are learning everything on Zoom and Google Classroom. But how else can it be supported? Do people need to pay to go for a 3 or 4 year degree, or could they actually have the bits that they need for their job, done virtually? That this is really going to change, and I think people are going to see the value of virtual learning is increasing. Telemedicine. Lots of barriers to that, which have just been dropped completely, and telemedicine is around. And I was involved in telemedicine probably about 10 years ago, and looking at putting some sensors into people's homes so that you could actually, a nurse could actually check up on a person remotely and then call in and actually have a discussion with the patient. And that actually meant they had more touch points, but they may not physically be there as often. So, and that we found that difficult to push forward because of the limitations of regulation. So, telemedicine, I think is really going to change. And then online anything. So e-commerce, esports, I just saw on the Front Funder campaign, there's a great esports one. If we can't get sports, esports is the next thing, and I don't think people who are not in esports realize how big esports already is. So, this really could be a game changer. On the real estate side, I think it's office and storefronts. I think if you talk about warehouse and logistics, I think that's less of a risk. We've talked about travel, hospitality, and I've got an example coming up. Any high touch businesses, so anything where, you need to have that interaction, and discretionary goods, except for the sins. We always know in a recession that there is, that the sins, so alcohol in particular, do well. So, I mean, let's just look to the public market. So this is the market that freaked us all out when the stock market just dropped like a stone. And this is one of the reasons why investors got nervous, because they just saw all their savings just disappear. And I think it was a case of, if you invested in 1929 and you didn't take out of the stock market, you wouldn't have broken even until 1951. And if you talk to someone like Warren Buffett, he was presenting last week at his AGM, and he was saying, he went back into the public markets 6 months too early in 2008 after the last recession. And you're thinking, well, if Warren Buffett, gets it wrong, what chance have I? And I think that's one thing we have to realize, is there is a real sensitivity around the public markets, that people have lost their money, that people are worried about their incomes. And so for the masses, which is what we rely on in crowdfunding, there is that huge sensitivity, which we really need to be mindful of when we're looking at individuals and campaigns, and how we're going to really connect them all up. The other thing is what shape is this? We don't have a crystal ball. I mean, as Warren Buffett said, he would have waited 6 months. He didn't have a crystal ball. And we don't know, is this going to be V shape? Now, a lot of indicators suggest that it can be. So it goes down, it goes straight back up again. And the reason for that is because if you look at the 2008, there was a shortage of money in the world. There wasn't, actually a lot of the countries were doing pretty well. This was a virus. This is what caused it. So remove the virus and the market should continue with a bit of a, hiccup, but they should continue. Is it going to be more of a U shape, so it's longer at the bottom and then it comes up? Is it going to be a W? Hey, we're doing well. Oh, no, we're not. And then out again. Or is it going to be an L, which is a depression? So, it goes down and we just don't dig ourselves out of it. And I think the key thing here is, one of the biggest drivers is small business and innovation. And I think with that, we shouldn't see that L I'm not promising anything. I'd love to see the V. It'll probably be somewhere in between, and I'm guessing it's not going to be a straight line, just as we see on the public markets here. But we just need to be sensitive that the public markets hurt people, and that they have this very close memory. They lost a lot of money. Now they are starting to come back up. But the one thing we're talking about is with crowdfunding is typically your private company. So you're separated from this. And so that's the one thing we've got to play on, is that this is a different category. And so we need to talk to people about investing in private companies, which are usually separated from the public markets, as long as you have that business. So if we look at some other investment trends, and I'm going to look at VC, North American VC funding was up in Q1. It was up 2% year on year and 10% over Q4. You know, in Q2, they're seeing investment trends in remote work facilitation, what we saw on those previous slides, e-commerce, healthcare, particularly telehealth. So if you're in those spaces, you know, that could be, you know, that's where investors are looking. So these are the most sophisticated investors. So, you know, that's what they're investing in, and they are investing. So what are the government regulations and platforms that are going on at this moment in time? So what we're seeing in Canada is actually, it's still very debt focused. Both the National Crowdfunding Association and Front Funder are running campaigns asking the government to provide more support for businesses to raise capital. And there's been wiggles. Have I actually seen real progress? No. And I'll be honest, I haven't seen as much progress globally that I would hope to see. But, you know, I really hope that Canada or the Canadian government does start to make some changes. The one thing as an optics is there have been an increased number of campaigns on the Front Funder platform. I think they've got 15 live at the moment, which is about the highest number they've ever had. So that's an interesting thing. There's a lot of campaigns out there. Similarly, in the USA, WeFunder just achieved $2 million in investment last week alone. That's a 35% growth in investment volume over the last 2 months. And they've increased the number of high quality applicants coming onto their platform. That's huge. Start Engine has had the most successful quarter ever, and they raised 24.4 million. So, you know, the USA is really driving crowdfunding numbers up. Now, there has been some limited support from the SEC. They have temporarily exempted small business owners from an independent audit if you're within a certain size, 170 to 250K revenue. And there's a few little things, but nothing really major that they've changed. In the UK, which probably has some of the most advanced regulations globally, there is an updated relief package that doesn't rely on debt. So unlike the Canadian option, and they've set up this thing, a future fund, which is 500 million to businesses that have raised capital. And we're just waiting for some details to ensure that covers people who've raised capital through crowdfunding, which is one of the main sources of raising capital in the UK. If there's anybody out there, I can also give you some insights for some of the other countries, but I think that covers who we have on our call today. So what we are seeing is there are lower valuations. So, you know, you may have to give up a bigger part of your pie because of the lower valuations, because some of those valuations are sort of driven by what has gone on in the past. We are seeing increased volumes of campaigns, and governments know that they cannot afford to lose a generation of startups. So if there isn't support, I am anticipating, for example, the NCFA and Front Funder campaign to the government should start to get some traction, because it is one of the most successful ways of building the businesses and getting that growth. So let me give you another example. So this is a pain-free dose microneedle. It was designed for diabetes, so for diabetics to be able to give themselves their injection and then go, but it could be used for mass vaccinations. Any mass vaccinations, you know, coming up? So what did they do? So this company reduced their target to ensure they achieved it. They wanted to make that a minimum target that they could do something meaningful. So people want to know that if they raised that money, they can still do something meaningful with it. But, you know, they also want to be successful. And what they've seen is they've seen lots of small investments. So as you can see, they've raised $79,000 with 53 investors. So lots of small investments. What we were saying before about people as there's the big investors, but the little investors, they are coming in, but just in more cautiously, I might say. And so what they've been doing is trying to expand the reach. And so with those 53 investors, working with them to try and get them to encourage other people to invest. And then they're also looking at it as a way of validating to help access other funding streams. So if they don't raise everything that they need, because they actually need 400,000 to do their full trials, then if this will give them validation, this will get them to the next stage. And as we know, there's government funding out there. So it's the validation that the government may need to actually provide them with additional funding. So it's a win-win all the way around. So if you're looking at your business right now, you need to think about, am I providing to the greater good? Am I, with customers doubling down, am I supporting them, say working from home? Or do I need to pivot and re-engineer my product? So I want you to have a real think about your business today and which of those you may need to do. 2/3 of the public, and this is back to that Edelman data that I really like, say they believe the pandemic will result in valuable innovations and improvements in how we work, live, and treat each other. So what I want you to think about is, how can you define and communicate your purpose? Your purpose should be always should be in a crowdfunding campaign, but it needs to be front and center. And you need to define it and you need to communicate it. You need to focus on solutions, not selling. You need to demonstrate your ability and your integrity. That's vital in this current climate. You're going to have to look at how you're going to work with the government to be successful. Regulations are changing, whether that be funding regulations, there's regulations, and you've got to make sure that you're on the right side of those so that you can get that uplift. What's the minimum you need to do something meaningful? Those days, if you said you needed 5 million to build everything, okay, but can you push that peanut forward with 400,000? And if you push that peanut forward 400,000, then you build the confidence to get that next 750,000 to get the confidence. So you may need to split it down to smaller chunks, but you just need to know what's the minimum you need to raise to do something meaningful. And if you can't do anything meaningful with less than $1 million, then you might need to think, okay, can I actually map out all my investors? Can I get my $1 million? Or do I need to postpone until the market's a bit more buoyant? And demonstrate how you will make money. So the market has changed. All those early slides, think about how you can actually make. There are lots of companies making lots of money at this time. And how can you be on their side? Because investors need to know that you can make money, because they need to know how they're going to make money. It's a really important part of your statements. And don't ignore COVID. Don't just sort of gloss it over. Talk about what you are doing to take up the opportunity presented to you, not in a negative way. It's like, how can you do it in a supportive way? And any of the risks and how you've mitigated those risks. So another example. So there was a pre-COVID, there was a campaign that was due to go out to build a distillery with a lounge. What's the post-COVID campaign looks like? Well, it's still to build a distillery, but actually a larger distillery than originally planned, because alcohol sales increase in a recession. And we're already seeing that just with COVID. We're moving to a gift shop and bistro to allow social distancing. And the focus is on how this is going to revitalize the community. So this is going to create jobs, this is going to create a focus. This is actually going to sort of bring money into the community. And also how to support local. So local ingredients and local business. So you can see how the campaign has pivoted from building a distillery with a lounge to building a larger distillery. And I think it's the final slide. So just going to see, as you can see, there's on the top right, there's some questions. If you have any questions, feel free to ask them at this time. I know I've gone a little bit over, but hopefully you found the information useful. But happy to answer any questions that you may have. Have I blinded you with numbers? I hope there weren't too many eye charts on there. Okay. I think this is one you've just definitely got to stay close to. As you can see, the data I have, some of that, the data that I shared with you regarding attitude to investing, that was 2 weeks after the markets dropped. And I know that they're doing, I actually spoke to Mark last week, and I know that he's looking at doing that again. And thank you very much for the feedback, Kimberly. I'm glad you enjoyed it. But so he's going to be looking at that data again, and we're going to see if the investor perspective has changed. I think the fact that WeFunder and Start Engine have seen such huge investment in the last few weeks shows that people are willing to invest, so I think that's a very positive thing. All right. Well, thank you very much, everybody, for attending. I would suggest that you follow the social media, keep up with what's going on, engage in the Crowdfunding Hub discussions, and I look forward to seeing you soon. Take care.